Hey guys, I want to welcome you guys to this week's podcast episode for the Financial Freedom Podcast, and I'm your host, Dr. Christopher Liu. And as you know, I'm always in the market for entrepreneurs, investors, people on the cutting edge, making an impact in this world. So today is going to be talking all about tax law. It's tax season. So we have Steve Moskowitz here to talk to us about it. So I'll let him introduce himself and get started. So, Steve, welcome.
Thanks so much for inviting me. And I'm a tax attorney. I'm the head of our law firm. And before I was a tax attorney, I was a CPA. And one of the things that I'm so interested in is saving people taxes. And a lot of times people will say, look at the giant corporations. They make billions of dollars with a B, and they legally don't pay any taxes. What's the secret? That is why I went to law school many moons ago. When I set foot in law school on day one, I already had a master's and bachelor's degree in accounting. I was already a practicing CPA doing taxes, and I was working for a big fancy firm whose clients were the Fortune 500 doing just that. I found out that our system of tax law has two purposes. Everybody knows about the first purpose, to extract money from us. But the second purpose is a system of incentives. And in democracy, the government can't order us to do something, even if they want us to, or it's good for the economy. So how does the government get us to do something that they want us to do, but they can't order us to do? They pay us. And they pay us through the form of tax incentives, tax deductions, tax advantages, things not being taxable. And that's what I'm all about. And what happens with smaller business owners, not the Fortune 500, they're people that work really hard, and they say, but I'm paying too much taxes. What's the secret? The secret is tax planning. And you say, well, that's terrific because, a Fortune 500 can have an army of guys like Steve. But what about me? I'm a small business person and I couldn't possibly afford to have that. No problem. That's why we offer our services to the clients. Much like a physician doesn't spend full time with his patient, but he gives him the treatment that he or she needs. So that's what we do. And there's so many things here. And what happens is people say, well, why is it so complicated? That's the way it is. Why is medicine so complicated? Why are our bodies so complicated? That's just the way it is. So we have somebody like you to say, Doc, fix my problem. And suppose I said to you, Chris, I have a magic business card. I'm going to hand you this magic business card and take it down to the IRS and they'll give you a good check for $1 million. Would you do that?
Yeah,
Of
I
course
would.
you would. But suppose I took that magic business card and I put it in the back of a dump truck, and then I dumped in a lot of other business cards. I took a big oar and I stirred it around, and then I sent the dump truck over to your medical office. And when you weren't there, the dump truck dumped all the cards in your office, and you come in the next day and say, oh my God, look at this mess. And you basically hire somebody to clean out the mess. Guess what you just did? You threw out the magic business card because you didn't know it was there. If you understand that concept, you understand the tax law. Tax attorneys, or at least us, we know where the magic business cards are hidden, and that's what we do for you. So let's talk about some more concrete examples. Suppose we have this situation. I'm going to ask a tough question. Are you ready?
Sure.
Would you prefer to A, pay more, or B, pay less taxes?
B, obvious.
Oh, wonderful. You've passed the sanity test. Now, what happens is we say, well, how can we do that? And one of the things we can do is setting up a pension. And I use the term pensions and retirement plans interchangeably, although there are some technical differences. We won't bother about them here. There's over 20 different types of plans, and there's 4 major advantages. 1, you pay less taxes. 2, your earnings from the pension are not taxed while it's in the account. So no brainer, the account's going to grow a lot bigger and faster because you're not paying taxes on the earnings. 3, it has special protection. So God forbid if you get sued, and people love to sue people, especially physicians. If you get sued for whether it's malpractice, an automobile accident, somebody says, Doc, 15 years ago, you looked at me funny, and that just caused me terrible anguish and mental distress. So you owe me $1 zillion. And the jury said, well, that's right. They can't touch your pension. It's exempt from lawsuits. And although I hate to mention his name, the poster boy for this is O.J. Simpson. OJ's had a multi-million-dollar judgment against him for years. He's never lost a penny of his pension. And last but not least, there's other benefits too. And the other benefits are most tax savings, most tax benefits. You have to write the check by December 31st, year one, in order to deduct it from year one. Not so with most pensions. With most pensions, we have up to the time of filing the return plus extension. So what that means in English is, depending on the type of entity, you have about 3/4 of the way into year two to set up the pension, fund it, and you can still, even though you did all that in year two, deduct it in year one. There's tremendous flexibility here too. Suppose in year one, you have a tremendously good year and you say, you know what, something special happened and I'm congratulating myself. I made all this extra money. Aren't I wonderful? But I don't want to be paying all these extra taxes. Now what? You can make multiple plan year contributions in one calendar year and essentially take an extra big pension deduction to wipe out the extra earnings. So there's all kinds of things that we can do here. And that's just one thing we can do. Let's take a look at something else. Suppose the doctor owns the medical building in which he or she practices. Or suppose you have a situation where the good doctor is a landlord. We have something which is, to me, brings a tear to the eye, the most beautiful words in the English language: a positive cash flow with a tax loss. So suppose we have this situation. We have rents from our building of 10 mil, and we have expenses of all kinds, including depreciation of 9 mil. So we've made a profit of $1 million. That's nice, but we don't want to pay tax on that now, do we? So what happens is we take a look at something called cost segregation analysis. So what this does, it greatly accelerates depreciation. This is how banks make money. $1 today is worth more than $1 tomorrow. You would rather have the benefit today, because with a building, a commercial building, you're depreciating over 39 years. That's a long time to wait. Even residential real estate is 27 and a half years. What cost segregation does is we send an engineer into the property, and he or she looks at everything and says, well, this is 39-year property, but this is 15-year property, this is 10-year property, this is 5-year property, this I can write off this year. It greatly accelerates the depreciation. Now let's go back to our example. We had the $1 million profit. Let's assume that through this method, we get an extra $1.5 million depreciation. So now we've wiped out our tax profit. And again, we don't write a check to depreciation. It's just a paper entry. But we've wiped out our tax profits. And now we have this $1 million, but we don't have to pay taxes on it. Now, Chris, when somebody gives you something nice, what do you say?
I say, thank you very much.
See, that's the difference between doctors and lawyers. A lawyer would say, more. I want more. Give me more. And let's assume the good doctor is married to a house husband. And the house husband sits on the sofa and he watches TV all day. And we say, okay, we're going to have someone that's going to qualify for a real estate professional, because there's an exception to the tax law. Because some of you, your accountants have, and remember, I was a CPA before I was a tax attorney, so I'm familiar with this stuff. Your accountant says, well, that's fine, but there's real estate losses. See, that's a passive loss, and you can't offset that against other things like wages, dividends, interest, profits from a business. But there's an exception to 460, it's Internal Revenue Code section 469. There's an exception to that. If one of the spouses, just one, and you don't have to be both, just one of the spouses in filing a joint return qualifies as a real estate professional, and that's an easy qualification to make, now you can write it off. So suppose the good doctor has made $500,000 profit from her medical practice. Remember, we have that extra $500,000 depreciation left over. We offset that against her $500,000 from medical practice. And now we take a look at this couple, and with just this simple device, we take $1.5 million of earnings, and we legally don't pay any income taxes on it. This is just one of the great things in our system. This is what the big boys do. And this is available to everybody. The tax law doesn't say, this is for Fortune 500 only. It's just, they know all about it, and most people don't. Most people, when I talk to them, I mean, we're talking about educated, intelligent people, but they never heard about this stuff. This is something different. I don't know how to do dentistry. I don't know how to do plumbing. I know how to do this stuff. So the bottom line is these are just two examples, and I could go on and on and on and on, which as lawyers, we love to talk, but maybe you have some questions for me. So Chris, what questions do you have before I chatter on?
Yeah, you gave a really good examples of different ways of saving taxes, and then one thing's talking about especially small businesses, and what are some of the most common things you see with when they're filing their taxes relating to tax law, and how can you, because a lot of people are small business, they're private practices, physicians, etc.
The first thing is I have seen so many absolutely brilliant doctors would also qualify as horrible bookkeepers. And what happens is by just not keeping track of things, they lose out on all types of benefits. So, for example, one of the things that we do for clients, we offer what we call success planning services. So what we do here is, besides doing the monthly accounting, we meet with the doctor as often as he or she would like, up to monthly, and we give business advice and tax advice, because one of the things that we have to watch out for is that your tax return, and a lot of people, that's their focus, the tax return. They look at it as a one-time event, the tax return, the tax return. It's like your physical health. You don't say, well, you get an annual exam one day a year, so that day you don't smoke. But all the other days you can smoke, eat all the sugar you want, lay on the couch, gain all the weight you want, doesn't matter. No, it's a year-round proposition, even though you see the doctor once a year. Tax return should merely be a summarization of a year's worth of tax planning. And there's so very much here. For example, let's say the good doctor has children. You want to employ the children in the practice. And what happens with that is that you don't just put them on the books. You pay them the fair market value for services actually performed. And there's a lot that the kids can do. For example, they probably know more about social media than the doctor does. So they can employ the kid to help. And, I understand that medicine is a wonderful calling, but it's a business too. And we can't forget that, because, we have to earn money, and we don't want to pay more in taxes than we have to. So in getting more business, and I've been to conventions of physicians where, there's all types of advice on how to get business. Well, your kids can really help you with that. Now, what happens with the kids? With the kids, we have a situation where we have a brand new unused tax bracket, a thing of beauty. So we know the doctor is probably already in the top tax bracket. So whatever they earn is getting taxed at the top tax rate. When you start paying your kids, you get a tax deduction, and they have a brand new tax bracket. So that dollar is far more keeping it in the family when the kid has it rather than the parent. We also get side benefits. We're teaching the child the work ethic. Now think about it. There's an awful lot of stuff. You're probably going to pay for a lot of things for your kid anyway. Say, for example, his or her education. How about if you pay with it with pre-tax dollars rather than after-tax dollars? And that's how you can do it, by teaching the kid the value of a buck and using his brand new tax bracket. So what happens here? The IRS gets less money legally. That's the goal, but one of the many things that we have here.
Yeah.
Other question.
It's really interesting. And what are the limits? How much can you pay? Some people they're not aware of this. What are
the fair market value for services actually performed? So what that means is, if you hired a stranger, what would you pay the stranger to do that job? And another thing, for example, suppose you do advertising and you send out cards that says, "We baby you." Well, you have a baby on the picture.
Mm.
Go to a modeling agency and say, "I'm thinking about employing one." You see them in diaper commercials, baby food commercials. There are babies who are actors, and there are agencies that employ them. Find out what they would charge you, and that's what you pay your kids. And if the IRS says, "Well, how did you determine that you're paying little Mary so-and-so?" Well, I went to the XYZ agency, and they told me that they would charge me X number of dollars to basically rent one of their babies. So I paid the same to mine. And that's just the beginning of it. And there's an awful lot that can be done.
Yeah. What about for example, solo 401ks? Tell us Roth IRAs. Tell us more about those vehicles.
So that's all part of what I called pensions. So the 401k, suppose you say, you know what, I have a 401k and I love my 401k. And I say, that's wonderful, Doc. Do you max? Yeah, I max it. I sure wish I could pay in more. Good news. You can have multiple pension plans at the same time. So you can have your 401k and you can also have the other plans. It's like when we go ahead and we recommend a pension to somebody, what we say is, well, look, there's multiple pensions, and we actually show them on a graph, say, okay, let's say for you, of all the pensions, we're not going to show you all of them, but we think A, B, C, D, and E would be the best for you. And then we say, okay, and here's how much you would save with pension A, and here's how much with B, and here's how much C. And let's look at it another way. Suppose the good doctor is in the top tax bracket, which, depending on the jurisdiction you're watching this in, most of you live in states that have state income taxes, some states you don't. But let's assume that your marginal tax bracket, federal and state, is about half. Let's further assume that we're going to make a $200,000 pension contribution. Guess what? If you say, yeah, maybe not, I don't think I'm going to do it this year. I say, fine. You know that 200 grand you're going to put away for yourself? Pony up $100,000 and give it to the government instead. Oh, well, how much? Wait a minute. What's going on here? And suddenly they find the money to do this. Because the thing is, you can't keep the money, but your basic choice is, do you want to give a bigger or smaller check to the IRS and or put money away for yourself? I have yet to meet a client, I've been doing this for 30 plus years, who would rather give the IRS the money than putting it away for themselves. Mm. And if you find somebody like that does want to go the other way, maybe they need a doctor more than a lawyer. He wants to do this. And people don't do it because they just don't know about it. And you know what, really, and this is so basic, but maybe you would relate to it as a physician. You know what keeps people away from a lot of these tax deductions, besides not knowing it? They're just so tired from doing their daily rounds. They're just too tired to even think about it. You have a physician that comes home and is so exhausted, his or her biggest decision is, should I get something to eat first or just go right to bed? They're probably not in the mindset, I wonder what I could do to save some taxes. It's, I'm just going to get some sleep. A major, major roadblock to this is people just don't know it exists, and they're tired, and they're spending all their time working, and it's the old shoemaker that doesn't have shoes. So the bottom line is, that's why we come and say, look, we know what you need, much like a physician. If I go to visit a physician, he or she isn't going to tell me all about medicine because there's not enough time in our lifetimes to be all about medicine. But they would examine me and say, okay, this number is good and this number do this and do that and don't do this. And that's what we do too. And it is incredible, the difference. And again, for anybody that has any doubts about it, look in the newspaper, look at what the Fortune 500 pays in taxes, and look at what you do. When I take a new client, one of the things I usually ask them is, I say, Doc, what do you think? You think who's making more, you or Apple Computer? Then we all laugh. So, I know Apple Computer makes more than I do. But I say, guess who pays more in taxes, Doc? That's where the laughing stops, and the doc says, hey, yeah, wait a minute, what's going on here? And that says, well, okay, if you like the results that Apple's getting, these laws don't say this is only for Apple Computer, but there's all kinds of things that we can do. That's what tax planning is all about. And we offer a variety of services that do good things for the client and save them a ton of money. And the difference here is by having a nice fat bank account as opposed to a bigger check, a bigger stack of canceled checks to IRS.
Yeah, really fascinating discussion, and really timely, especially now it's tax season. How can clients reach out to you, check you out, follow you on social media, and check out your services?
Either call us at 888-TAX-DEAL, that's 888-TAXDEAL, 888-TAX-DEAL, or MoskowitzLLP.com, MoskowItzLLP.com. Doc, thanks so much for inviting me. I had a great time. And if you ever want to hear some more about taxes, invite me back.
Yeah. And, again, taxes are our biggest expense, and, whether or not they use for good purposes, but be sure to check out Steve's resources. They'll be in the links and show notes. and really important, especially business owners, entrepreneurs. Taxes are huge. And with that, thanks so much for coming onto the show.
Thanks for inviting me.